Good morning, everyone. It is Friday, May 5th, 5:16 a.m. Central Time as I speak here. Happy Cinco de Mayo to everyone. The grain markets are mixed here this morning. Matt, how are you doing this morning?
I'm doing pretty good. Just trying to get ready for a weekend of warm weather. I mean, this is going to be the warmest we've seen this season. So, yesterday afternoon, we were pushing high 70s, which was sure nice to see. But yeah, it's finally getting some warmth around here.
Yeah, we hit mid 80s here in Nebraska yesterday. It felt pretty darn toasty.
Hmm.
So, this morning, we're going to start down in Argentina. Argentina's corn crop forecast could face another reduction due to the ongoing effects of a devastating drought. The Buenos Aires Grains Exchange may reduce its prediction for Argentina's current corn crop. The exchange reported that the country's corn crop forecast could drop below the most recent estimate of 36 million tons. At the beginning of harvest, the group estimated a total corn yield of 50 million tons. The current soybean crop projection for Argentina, which is set at 22.5 million tons, may also be reduced. To date, the country's corn harvest is almost 20% complete compared to about 36% of the soybean crop. Argentina ranks among the world's leading exporters of both corn and processed soybeans. So, of course, this is not breaking news. We've been talking about the drought down in Argentina for some time, but how do you see this next potential reduction in the country's soybean and crop forecast impacting the markets?
The thing about this, well, I mean, you know all about drought. I think you and I were just talking the other day about how dry it is out there. The tough thing is, in your part of the world, you guys just can't catch rain. It takes forever to get one. Same thing in Argentina this year. You always, though, in Argentina, I believe, feel like you're going to finally break out of this thing, and you just never did this year. So it was one of these droughts that just doesn't go away. The bean crop is less than the original estimate by 50%. I mean, it's less than 50% of the original estimate. Corn isn't quite that extreme, but it's still, whenever you start trimming 14, 15 million metric ton off of your original forecast, whenever you're a big corn exporter, it certainly plays havoc in the world program. And so we all know that the bean crop in Brazil was big. We don't know if the safrinha crop's going to be big. We know that they've set the table for it to be a big crop. They're still a long ways from the finish line, and we all know that something can change there. So I guess from my vantage point, yes, it's an old story, but it's something we've got to keep in the back of our head for a couple of reasons, and that's the World Export Program. We know that, the Argentinians are going to get soybeans out of Brazil because they want to at least try to still be the number one world soybean meal exporter. And the other thing is corn. Of course, they're going to be exporting corn. Now, one thing I'm going to say before we move on from this, Mackenzie, is I've said to a lot of my customers lately, just think if Argentina would have had a big bean crop. I mean, obviously this bean market, we've taken the shine off of it. But what would it look like if Argentina had a big bean crop and Brazil has this monster crop this year? So we
Yeah.
do know as a world we're capable of growing excessively more than what we're using. We do know that. And that's something as a producer you got to keep in the back of your head when you're managing risk.
Oh, definitely. So, speaking of drought, drought conditions here in the U.S. have eased a bit. So, in portions of HRW wheat areas, they've received some rain down in western Kansas and Oklahoma this past week. However, much more is needed. There's no doubt about that. Drought conditions worsened through northern Kansas and across the western portion of Nebraska in the last week. Dryness continues to expand across Iowa, Illinois, western Indiana, and Missouri. Much of the Corn Belt, along with Nebraska and the Dakotas, are expected to receive considerable moisture over the next 7 days. So, as it stands today, about 25% of the contiguous U.S. is experiencing some level of drought. That's down from about 13.5% from last month. Approximately 174 million acres of major crops in the U.S. are experiencing drought conditions this week. That's down from almost 12%. That's down 12% from last week, excuse me. So it's clear that we're seeing some relief when it comes to the drought, but we're definitely not out of the woods. Here in central Nebraska last night, we finally received some rain. It has been quite dry. What is the drought situation like where you're at, Matt?
I mean, yeah. So I believe, you and I were just talking about this a couple of days ago that I said, man, I hate to complain about it being dry because you guys are in this just like epic drought that you've been struggling with for what, going on 3 years now? I
Yeah,
mean,
yeah,
yeah, I
since
mean,
2020.
right. It's been going on for 3 years. So here's the deal. In my part of the world, I don't want to complain because we've had really good crops the last couple of years. But what is it right now? That's what your question was. We're dry. Like you look
Mhm.
at that drought monitor and you see that yellow go through there. I'm right in the midst of that. It's not red like you are. But here's the deal: we don't have any tiles running. And the last time that I could say we didn't have any tiles running, 1st of May, it's 2012.
That's
It had just
worrisome.
dried up during the spring, and we never did catch anymore. And to be honest with you, I'm not even so sure that in the May 1 of 2012 that we didn't still have a tile or two running. But the thing is, it's just dry. So some folks had worked ground a little bit wet, from what we'd heard, and they have stuff laying in dry dirt. Unfortunately, it's not anything to laugh about. They need rain though. And
Mhm.
so, there's not a whole lot of ground that was worked super wet to where guys got a crust or anything, and they're going to have to really need rain to get the crop up and going. But let's just say that it's as dry as what we've seen at this time of year. Now, as you suggested, I mean, most of the US is supposed to get a heck of a lot of rain here this next week.
Yeah.
That's a pretty important deal in my opinion, because as you know, when you get super dry, sometimes it's hard to catch a rain and to kind of break out of that pattern. And so if you don't break out of that pattern next week, I fully expect that the market's going to be paying very close attention because, like I said, there's some pretty important areas of the U.S. that are getting pretty darn dry. And the two that come to mind, that are joining this party, so to speak, is Iowa and Illinois. And those obviously are pretty important states.
And that was going to be my next question. When does the market start to factor in these dry conditions, or has it somewhat already?
I don't think that there's anywhere a weather premium in this market. I
Okay.
really don't. And so the reason I say that is because carryouts are awfully tight. We know stocks are tight on old crop. We're making the assumption that we're going to have very low prevent plant because the flip side of this weather equation is that you've got folks north of you that are saying, hey, you know what? It'd sure be nice if it would warm up and dry up so
Mhm.
we can get the crop in the ground. I don't know. I still think the USDA might be making a bold assumption that the prevent plant's going to be super low. I think that if you still had $6 plus D's corn, prevent plant probably would be lower than what it might be at 525, 520. I mean, just I don't know how excited you are to get out there and plant corn. Now, yes, input costs have come down. It's just you're not as excited as what you'd be at 6 1/4 corn. So, yeah, I think that this weather thing needs to play out quite nicely for us to be able to plant 92 million acres. And if we do, then I think that yeah, you're probably going to have a pretty decent sized crop on the way, at least with just relatively decent weather. But we're a long ways from having that discussion. And I do think if you miss another big storm, because that's what's happened for us, is that we've had forecasts for rain. And
Mhm.
you get 2/10 or whatever, and I know 2/10 to some people would just be great just to be able to
Yeah.
prime the pump, so to speak. But I'm just telling you, we've missed out on most of these big rains this spring.
Yeah, that's exactly how it's been here in central Nebraska also. We've had a lot of forecasts for rain, but it gets here and it doesn't show up. So hopefully this trend of moisture does continue.
Absolutely.
So, moving on to this banking crisis, U.S. regional banks are continuing to deal with uncertainty that was apparent on Thursday. So, PacWest Bank announced it was considering selling the company. As a result, the bank's shares fell by over 50%. Western Alliance Bank also came under pressure as talks of a possible sale caused the bank's shares to drop 39% before trading was halted yesterday. TD Bank Group and First Horizon Corporation called off their planned $13.4 billion merger yesterday. Lots happening yesterday, and they called that off, citing regulatory hurdles. One of the main causes of this banking turmoil is undoubtedly the Federal Reserve's aggressive path to fight inflation. So, how much more erosion are we going to see within our regional banking sector, in your opinion?
Yeah, I got to watch exactly how I put this, but I talked to Joe about this a little bit on Wednesday. Actually,
Yeah.
here's the thing: I think that there's a lot of things that have essentially been set up in order to see consolidation in the banking industry and potentially benefit some of the larger institutions, so to speak. And so, what's going on here. Well, it's interesting. Powell comes out on Wednesday and says, we're going to go ahead and go up a quarter. We have full confidence that the banking sector is in really good shape. And then what do you have? Just the, what hits a fan over the next 10 hours, 12 hours, and then you're talking what, two, three banks that are essentially, large banks that are saying, well, we may end up having to sell our assets out. So, or a portfolio or whatever it may be, have a takeover. Bottom line is, you continue to raise rates with the kind of debt this country has seen. There's a lot of low interest loans that are out there. You and I
Mhm.
both know that.
Yeah.
Heck, we got some farmland that we locked in at 3%. I wish I'd have locked in more at 3%. But bottom line is, that's cheap money compared to what you can borrow at now. I don't think you could get a farm loan as far as buying a piece of land for under 7.5 right now. So, there's a lot of cheap money that was out there. And I think you've got your banking industry kind of in turmoil. And I think a lot of folks over the years, last couple of years, have said, you can't raise interest rates too much. It'll cripple the country. Well, it's not going to cripple the country, so to speak, but it's certainly going to be extremely hard on certain sectors. And banking is going to be one of them.
So essentially, our country hasn't reacted to these increased interest rate hikes. That's why the Fed has continued to increase interest rates. I know this would be speculation, but in your thoughts, are we done with increasing the interest rates here for a while? Or do you think we could maybe see one again in June? I know Powell said, we're probably done for a while, but what are your thoughts on that?
Yeah, I kind of think that if you continue to see what you and I are talking about occur, there's going to be a lot of pressure to
Hmm.
not raise rates. And so, I think that we're probably in a spot right now where we can kind of chill out and see how the economy reacts. My personal opinion, as I talked to Joe the other day, Joe and I both agree that, as recessions go, we technically were in a recession this last year. It's just that the powers that be decided they were going to change the definition. I don't
Maybe.
know. I'd like to change the definition of a lot of things, McKenzie,
Yeah.
but
Oh,
uh,
I agree.
I don't know. It's going to be very interesting to see how the economy reacts. But you and I both know we've just printed money and printed money and printed money.
Yeah.
Well, no freaking kidding that you're going to have some issues in the country, and you're going to have inflation, and you're going to end up seeing, you're going to try to fix everything by raising interest rates. Well, we've got more money borrowed in this country. We all know that, than what we need to have borrowed. And so it's right for situations to occur. I do hope that we can avoid recession. I'm kind of like Joe, that we've talked about it for long enough that maybe we actually do avoid it, but we certainly aren't sitting here running on all 8 cylinders right now.
Yeah, that's for certain. So, Russia is claiming the U.S. was behind the alleged drone attack on the Kremlin. So, the U.S. is being blamed for Wednesday's drone attack, which Moscow claims was an effort by Ukraine to kill President Vladimir Putin. The U.S. and Ukraine have both denied responsibility. A Kremlin spokesman said Washington was the mastermind behind the incident, and Kiev acted on U.S. orders with the attack. Russia has repeatedly accused the U.S. of making key decisions for Ukraine since the war began back in February of 2022. The U.S. has supplied Ukraine with more than $77 billion in military and humanitarian aid, but has warned Kiev against attacking Russian territory. So it seems as if Russia is just looking for a reason to ramp up their military attacks with this situation. What are your thoughts?
um, okay, so where do we start? How do
Yeah.
you unpack all this? Here's the thing, Mackenzie. If the U.S. wanted to take out Putin, uh, they would probably be able to. We're pretty inept in a lot of ways, let's be honest.
Hmm.
But I think that they could probably do better than firing a freaking homemade firework at the top of a building. I don't know. It's what it
You
looked like
think?
to me. I don't know. Here's what I think. Here's my personal opinion, okay? And this is my opinion only, has nothing to do with Joe Vakovic or anything about his show. I think Russia was long wheat, is what I think.
Oh, yeah.
You go in last Friday and everybody's wondering, where's all this buying coming from? I think there were people buying that knew there were going to be developments over the weekend. What were the developments over the weekend? Oh, we got bombers in the air on Sunday night. The market didn't react, though. The market's like, who freaking cares? We're getting sick and tired of all this talk out of the Black Sea region. We really don't care. Well, then what do? You got to figure out something. I do think that there's been a lot of manipulation of the market. I truly believe that. I know some people might think, good Lord, where are you going with this? I just think that where there is an opportunity to benefit from a situation, there are people out there that are going to absolutely take benefit of that situation. What the video that we saw, if that's even exactly what it was, and you and I both know, what do you even believe anymore, right?
Oh, for
But
certain.
right. And so if the video we both saw is what it was, that was a pretty poor attempt to take somebody's life, you know? I mean,
Oh,
good
yeah.
night. I would think you could do a little better than that, so to speak. So yeah, I have no clue what's going on there. My personal thought is that it probably wasn't from Ukraine or the US. I mean,
Yeah.
that's just my personal thought.
Yeah, it was hard to take that attack seriously when you watch the video. It was quite the headline.
Yeah, absolutely.
So moving on, U.S. export sales of corn fell to their lowest weekly total on record last week. Net corn sales for the current marketing year posted reductions of 315,600 metric tons. The reduction in sales was mostly attributed to China's flash cancellations of 562,800 metric tons. The U.S. hasn't recorded negative corn export sales during April for at least 20 years. This is notable because U.S. corn exports typically thrive during the February through June timeframe. Accumulated corn sales for the current marketing year are down 35% compared to the same period last year. Net soybean sales for the current marketing year totaled 289,700 metric tons. The print decreased 7% versus the previous week, but increased 78% from the prior 4-week average. Wheat sales increased to 211,100 metric tons, up 36% versus the previous week. So these corn sales, they are just beyond terrible. They were pretty dire to start with, even before China came through with those flash cancellations last week. Explain to me where we should be with these export sales.
Yeah, and so essentially, what you saw yesterday, of course, was a little bit of panic. Everyone knew we had cancellations, though. Okay, it was big news. Obviously, it kind of kicked the corn market, in the rear end, so to speak. So, you pay for it again, though. Yesterday, not so much. Market goes down. You end up closing actually in good fashion, up just a shade or unchanged. And so, you come in here this morning, you're back up again. So this news was short lived in the way that it impacted the market. This news actually, though, if we're going to be fair about it, this news was traded whenever it actually happened, and so and I'm talking about the cancellations. And so we get them actually report on the weekly export sales yesterday. But where should we be? We should be in excess of this. And Joe and I were kind of talking balance sheet the other day. We both agree that they're probably going to have to adjust exports lower. Are they going to do it here in May? I don't know, but I guess Ag Markets view, just to tell you, I mean, we're down 50 million on demand for this May report for next week. I can't tell you if that's all ethanol, all exports, or a combination of both. My thought process is it's going to be a combination of both. But bottom line is we're not running the export program we should. We all know that once your bean export program starts to dry up, we're the game in town until Safrina comes around, right? And so
Mhm.
this is a year where you don't have Black Sea to count on this time of year. I mean, they've really ramped up corn exports over the last few years. We know that they've pretty much seen those dry up. We know Argentina is not going to be putting much corn on the world export market. And so the U.S. is sitting here, should be cleaning house when it comes to exports, and we're not. So if we don't see a big reaction here before too long and start to see our exports really pick up, it's going to be super disappointing. Part of the reason I think the trade was a little disappointed yesterday that the net sales were a negative is that they were hoping that we had enough positive sales, to counteract this, to not see such a negative number. But again, like I said, Mackenzie, we're up 3 cents today, and we closed the market well off the lows yesterday, right at the highs, and we're unchanged. So bottom line is, I think that we're in pretty good shape, even though it's a pretty disappointing program right now.
Economic concerns and weak Chinese demand sent oil prices lower on Thursday. Oil prices are heading for a third straight week of losses due to concerns over a weakening economy and slowing Chinese demand. Oil prices also suffered after the US dollar gained strength on Thursday when the European Central Bank raised interest rates. That was, of course, just one day after the Fed raised interest rates here in the US. In early trading, West Texas Intermediate fell to a session low on Thursday of 63.64 per barrel, the lowest price since December 2021. As of the close on Thursday, oil prices were down 9% week over week. However, here on Friday morning, Brent crude is trading positive. What are your thoughts on these oil prices?
I said the other day to a couple different people that interviewed me that I really don't think we'll spend a lot of time under 70. But yes, I mean, this oil market is going to be reactive whenever you continue to get what I would call kind of disappointing economic data. And the bottom line is, I think what the oil market's trying to figure out is, what are people going to want to do as far as are they going to want to get in their car and drive? And it's not just in the U.S.; it's everywhere. And so, what's the economy going to look like? How's it going to support that? And there's no question. You and I already talked about it. There's some concerns here. There's a lot of reasons to be concerned, but I do think that oil should stabilize above 70. If it doesn't, I sure hope that we fill this freaking SPR. I mean, we've talked about filling the Strategic Petroleum Reserve and that we were going to start in that 67 range. But our reserve is very low, and sometimes I wonder if we're going to refill it at all. But I certainly hope that if we continue, at some of these low prices, that we're the ones buying the dips, because that would certainly make a lot of sense to me.
So cattle futures finally firmed on Thursday after a couple days of major losses. Live and feeder cattle futures didn't have any big moves yesterday, but that was actually a relief after the big losses we saw on Wednesday. Nice to see some stabilization. Cash cattle trade was limited in all regions on Thursday afternoon, with too few transactions to set a trend. Choice box beef ended the day at 309.52. That was up 43 cents. Select ended the day at 287.49. That was up 37 cents. What are your thoughts on these cattle markets? Do you think we've found some solid ground, or they will just continue to react to this banking crisis like we saw back in March?
Last week, if you remember on Friday, I said, I didn't like the way the cattle market traded on Thursday, because the corn market was down pretty hard on Thursday and cattle was up, 30, 40 cents. I was like, interesting,
Yeah.
And
Yeah.
so I feel like what's going on, Mackenzie, is that some of the people that want to invest in this cattle market, they know the fundamentals are good. They're saying, how far do we want to push this thing whenever economic stuff is starting to kind of get into our head, so to speak. I do feel like there's some wary investors, if you will. And so anytime, this being in the cattle deal, anytime you see the equities take a hit, it's really hard on the cattle market to be able to rally. People are concerned about what's consumer confidence going to be. Is Mackenzie going to want to go to town and get a steak dinner on Friday night, right? I mean, because it's not cheap. We all know that.
Oh, yeah.
But those of us that traveled this past winter, I mean, you couldn't get a seat anywhere all winter, and people are still spending money. I do think they're still spending money right now. We are getting into grilling season. I think that you're going to stabilize this market. I don't think that you can expect that we're just going to race. I think it's going to have its time, though, that we'll get to some prices that we're going to say, holy smokes. And it's just simply due to the fact that the fundamentals of this thing are going to be, it's kind of like holding a beach ball underwater. And I'm not saying we're going to go to $200 necessarily on fats, but I do think that you'll get to a price level, as the market generally does, that everyone feels like it's way too high. So I don't think that that's happened just yet.
Right. Well, Matt, I want to thank you for joining me here this morning. You be sure to have a good weekend. Everyone else have a great weekend. We will see you back here on Monday morning.
Thanks, Mackenzie.